How's it going, everybody? I hope you're doing wonderful. In this video, we're going to take a peek at my portfolio. I'm going to show you how it's performed, how many dividends I've received in the month of February. And ultimately, this is to give you complete transparency into what an investing portfolio is like, to show you that it is possible to achieve financial freedom through investing, not only from the capital gains perspective, but also passively through dividends. And before we hop in, I just want to say thanks for taking the time to check out this video. It really means a lot to me that you take time out of your day to come check this out, and I appreciate each and every one of you. So looking at the portfolio so far, the value is $35,638, and of that total, about $2,700 comes from pure dividends, and the other $8,200 comes from capital gains. And so with that, our total money weighted return is 64%, which isn't too bad. I've had this portfolio for about 4 years now, so I think it's right about where it should be. And if we look at the last month specifically, it was pretty decent. We had capital gains of about $1,250 and dividends of over $80. It says 62 here, but there was one that wasn't really recorded as a dividend, which I'll show you in a little bit. But over the past month, the total weighted return is over 3%. And just diving into some of the pies here that I have in my M1 Finance portfolio, just showing you the gainers and the losers. The biggest gainer was healthcare. We had companies like Eli Lilly jump over 18% in the past month, which is just absolutely insane. Other companies like Johnson & Johnson and AbbVie perform pretty well in their own right, but that 18% is just insane, especially when it has the most weight out of this pie as well. So that's great to see. A lot of these other pies perform pretty decent, kind of in that 2 to 3% range. Telecom performed poorly. I only have AT&T in there. But if we look at real estate, that was the other one that performed pretty bad. You had a Realty Income Corp, Vici Properties down over 2%, Brookfield Infrastructure Partners down over 7%. So I think I say this in almost every video, but this is the beauty of having companies that don't move alike. Because if you invest in different companies within different industries, different sectors, there's a lot of factors that move those companies up and down. So when you diversify your investments, you're not putting all your eggs into one basket, but rather you're investing in a way so that if part of your portfolio performs poorly in any given time frame, well, you have a better chance of the other portion of your portfolio performing better, so they kind of level each other out. But hopefully over the long term, if you invest in good, solid companies, your returns will trend upwards. So if you ever do have a poor performance in your portfolio, don't just sell right away. You really want to look at the factors behind why it's going down and really consider the long-term performance. When do you want to cash out? For me, I'm still fairly young, so I don't plan to cash out anytime soon. I'm just going to keep investing into this portfolio, reinvest the dividends, and hopefully get that compounding effect. With that said, let's take a look at the dividend payments and see what we actually got this month. So we start out with $4.81 from AT&T, a company that just had an outage not that long ago, and I believe they're refunding customers $5 each. So if you're an AT&T customer, look into that if you're interested. But this position is definitely a hold for me. I'm not buying anymore. I'm not selling quite yet. I'm definitely just on a wait and see with AT&T, and that just rhymes, so that's awesome. Next one is Texas Instruments. They brought in $4.26, and this is one of my more favorite companies, I would say, in this portfolio. It's a fairly interesting technology company that has been able to increase their dividends year after year for a really long time now, and not only have they increased their dividends, they're doing it by a really nice growth rate. And that's what you want to see with a company, especially one that pays dividends. You don't just want to look at how long they've been paying dividends, but you want to look at other factors like what has the growth rate of their dividends been over the last 10 years. Because you're going to see with a lot of companies, especially real estate companies, they pay dividends year after year and they grow those dividends. but the rate at which they grow them is normally very, very low. But if you find a company like Texas Instruments that is able to grow their dividends between 10 and 20% year after year, you're going to be sitting with pretty nice dividends down the road. Next up is a very boring company, but that's how I like it, and that is Colgate. They paid $2.29. Following that is 63 cents from Ally Financial. I really moved a lot of this position out and moved it into a JP Morgan, which is one of the biggest banks in the world. But I have just a little bit of Ally Financial left. Next is a REIT. This is National Retail Properties. They paid $10.39. After that is Stag Industrial. This is another REIT, but it actually pays monthly. And rather than your standard commercial properties, these guys invest in industrial-based properties. So they paid $2.67 this month. Pharmaceutical company AbbVie is next. You saw the sector perform quite well over the past month. So with that, they paid $6.43. Procter & Gamble, another boring company, very much like Colgate. They paid out $4.25. Realty Income Corp, everyone's favorite monthly paying REIT. I say that kind of jokingly because if you look in every dividend investor's portfolio, many of them have this company pretty much just because it does pay monthly, and historically it has performed pretty decent. But this month they paid $6.10. Next up is one of my favorite companies in the entire world, and that is Apple. This month they paid $2.98. And the biggest piece of news from this company recently was that they dropped their plans to make cars, which I actually think is a really smart decision. Making vehicles is very, very difficult. There are so many resources that go into making vehicles. And while Apple certainly has the resources to explore that, I just think they're better off sticking to what they know, and that's making phones, computers, and just keep doing what they're doing. They have such a great following right now. They have a lot of cash, so they can reinvest back into the company, or they can pay it out to shareholders in the form of dividends. So while a car would be cool, I just think it would use up too much of their resources and distract them from what make them so great. Next up is Costco. They paid $1.29. This is more of a low dividend yielding company, but one that has performed fairly well over the past 10 or 20 years. So the dividend payout is not going to be very much. 97 cents comes in from Caterpillar. Then we move into an ETF. This is SPHD, which is a monthly paying ETF focused on higher dividend yielding companies that tend to fluctuate a little less in price. And this month they paid $7.32. We also got $3.42 from Fastenal. And the last company here is from Enterprise Product Partners. They paid a whopping $25.71. And for whatever reason, M1 Finance didn't classify this as a dividend this quarter. Must just be some sort of error in their system, but it is indeed a dividend. So with everything being added up, the total income for February comes to $83.52. So compared to this time last year, we were at $77. So that's about a $6 increase. And this time last quarter, pretty much the same, about $83. Haven't been able to invest as much as I would like, but overall I'm very pleased, and I'm really hoping to get this to $100 in the second month of the quarter this year. So we'll see how that goes. And just another fun little metric that I like to have here is the yearly, monthly, weekly, daily, and hourly wages. So essentially, I just take the 3 most recent months and break it down to get these numbers, but our yearly wage is $1,076, so not too bad overall. I know this isn't a ton of money, but the fact that this is completely passive, don't have to do anything, makes it really rewarding. So that's gonna wrap up the video. Thank you all so much for taking the time to check it out. I truly do appreciate each and every one of you. Let me know down in the comments below how much you received in dividends this month. I'd love to see what you guys all got. Thanks again, and I'll catch you in the next one.